Stocks 5150. Today we're going to talk about E-Trade Pro, and we're going to talk about a trading strategy called a strangle. A strangle is an option strategy that's used when you think the market or the underlying asset is going to have a big price swing. So like, say for example, the FMLC meetings, like when Jerome Powell passed press conference, usually the stock market swings. So whatever you're trading, if you're trading SPY or Tesla or whoever, those two are going to swing, for sure. SPY definitely will swing when Jerome Powell's speaking. So this is how you make money with that. You want to do a strangle. So a strangle is an option strategy that aims to profit from significant price moves on the stock, whether it moves up or down. So what you do is you buy a call that's out of the money and a put that's out of the money. Out of the money, if you don't know, we're going to go over here. Let's see, put it like this. Calls and puts. Retrieves. Okay, so calls are over here and puts are over here. When something is in the money or out of the money, come down where it's colored. It's usually shaded, and it's up to you how you change these right here. So you see the price of Tesla right now is 421. So anything that's below 421 is going to be in the money. You see how this color is shaded like that? Then you get here 437. What is this thing? It's not showing what I'm. In the money is there. Oh, you know what? It's because the market ain't active right now. That's why it's not showing it. So disregard that little lesson. We'll show you that some other time. All right, back to where we were talking about though. Over here, if you wanted to do a strangle, you would come here and you can place, you see here in your strike price, so it's a $5 increment. So you would buy a call that's at 80 and then buy a put, strike price is 70. Now here on the width right here on this part, you can select the width, and this goes by $5 increments. So see, the width is 80 to 75. So if you select 2, now it's 85.75. That's $10. You see what I'm saying? So it's a multiple of 5. So if you put it at 15, see 90.75. So you can spread out your strike prices as far as you want, but it's, remember that width is a multiple of 5 increment. Yeah, multiple of 5. So we got it at 3. So what we would do is probably do a 20. No, that'd be too much. We'd do a 10, a $50 one. So that'd be a $50 gap. So then we would come down here, and Tesla's strike price is 421. So we want to have one that says a $50 gap. And so we would do a out of the money Tesla strike right here, 450, and a 425 put. You see what I'm saying? So it's always going to be, the call is going to be to the left, and the put is over here to the right. So if Tesla drops and goes below 425, you'll start making money. If Tesla runs up and goes above 450, you'll start making money. You understand? Real simple, real easy. And remember, this right here, the width is key. You control that with that because that gives you your increment. So if you did it for, no, not 100, we'll do a 20. That's going to be multiplied times 5. So this should be $100 apart. 175, 75. See what I'm saying? So you go down here to 421. So we will buy an option. We figure that it's going to go up. So we would go to 450, 450, and 400. And you see that only costs you $900. So that right there wouldn't be too bad. Not at all. With a delta of a 0.01. I would try to have like this right here, 0.13. That would be a better delta to have. A 460 and a 410. And that one will probably make you some money. So you'll make the money up and then you make the money down. This is something though, with this strategy, you definitely want to be sitting there watching it. And I wouldn't do this like, well, I guess you could do it long term if you wanted to, but more than likely, this is something that you want to snipe on. Get it in and get out. Like, let's click on this one. So see, where was that? 450. I said at 13 delta, yeah, right here. Boom. So this put, if we did this and expires December 27th, the highest it's been right now has been 1230 $12.30. That's that right there. And look at the moment. It is at 860. So see, could have got that when it was at the low, and then it's on the way back up. Make the money. Make the money. A strangle. And you use this in times of, I won't say uncertainty, but when you know the market's going to swing. You understand? So if the FDA is coming out with something, or if Jerome Powell is speaking, or coming up now, DJT, whenever Donald Trump get ready to make a speech, and maybe he's going to say something to make the market swing. If you're expecting some news, this is how you play on that. All right? So stocks 5150. Stocks are crazy. Buy the strangles if you think the market is going to swing. Peace. We out.